Here's a shocking truth. Health insurance premiums are skyrocketing next year, and there's almost nothing you can do about it, unless you work for one of these forward-thinking companies. But here's where it gets controversial. While millions of Americans face higher paycheck deductions, some employers are quietly revolutionizing the way they handle healthcare costs. Could this be the future of workplace benefits, or just a costly trend? Let's dive in. As part of NPR's Cost of Living, The Price We Pay series, https://www.npr.org/series/cost of living, we're exploring the forces behind rising prices and how they're reshaping lives. How are these increases affecting you? Share your story with NPR here, https://www.2021/8442/cost of living prices. The alarming numbers behind healthcare costs. Healthcare in the U.S. is already the priciest in the developed world, and it's only getting worse. Last year, the average annual premium for a family of 4 on an employer-sponsored plan topped $25,500, according to KFF. www.kff.org/interactive premiums and worker contributions among workers covered by employer-sponsored coverage 1999-2024. Employers covered about $19,200, while workers chipped in roughly $6,300. Since 2019, premiums have surged by over 24%, and experts predict another steep climb next year. https://www.npr.org/2025-09-12 NXS1-5534416 Healthcare costs soaring, blame your employer. Why the spike? For-profit entities, drug makers, pharmacy benefit managers, hospitals, and insurers are largely to blame. While innovations like GLP-1 weight loss drugs and advanced cancer treatments are life-changing, they come with staggering price tags. Post-pandemic, more people are returning to doctors, driving up demand and costs. Meanwhile, mergers among healthcare giants have given them greater power to hike prices. npf.org/health-costs-10 things to know about consolidation in healthcare provider markets. And this is the part most people miss. Even if you're insured, high deductibles and copays can still leave you financially vulnerable. A radical solution for some workers. For the 154 million Americans with employer-sponsored insurance, https://kff.org/state health policy data/state indicator health insurance coverage population 064. Next year's paycheck deductions could jump by 6% to 7%. https://mercer.com NENS Insights U.S. Health News. Employers prepare for highest health benefit cost increase in 15 years. But a growing number of companies are refusing to pass these costs on to employees. Take Boston Consulting Group, BCG, which covers all premiums for its 10,000 U.S. employees and their families. A move that's both rare and transformative. Healthy employees are productive employees, says Alicia Pittman, BCG's Chief People Officer. It's a big investment, but it pays off in retention, recruitment, and morale. While Pittman didn't disclose the exact cost, she emphasized its impact on BCG's culture and bottom line. The trade-offs and surprising players. Zero premium plans aren't just for corporate giants. Startups like Bartesian, a Chicago-based cocktail machine company, are also stepping up. Founder Ryan Close, a Canadian transplant, was stunned by U.S. healthcare costs after moving here. It was a wake-up call, he recalls. Now, Bartesian covers all medical, dental, and vision premiums for its 30 employees and their families, plus $1,000 annually for flexible spending accounts. But it's not without trade-offs. Bartesian doesn't offer formal parental leave, and as the company grows, healthcare costs will too. Here's the question. Is this model sustainable or just a temporary perk for a lucky few? Smaller employers join the movement. Nonprofits and small businesses are also getting in on the action. ZocDoc, a scheduling software company, offers a zero-premium plan with a higher deductible, offset by contributions to employees' health savings accounts. It's an investment in our team's well-being, says CEO Oliver Carraz. If we're healthy as a company, we can afford it. The bigger picture. While zero-premium plans are still uncommon, only 12% of large employers offer them, according to Mercer. They're gaining traction. But they're not a cure-all. High deductibles and other out-of-pocket costs can still burden employees. And here's the real debate. Should companies bear the brunt of healthcare costs? Or is this a societal issue that requires broader reform? What do you think? Is zero-premium healthcare the future of employee benefits? Or an unsustainable luxury? Share your thoughts in the comments. Let's spark a conversation.